markets, and if we look at the summary page, you'll see that we are now bears of the dollar, bulls of the euro. That's the outstanding situation. We could equally possibly be bulls of sterling and bears of the dollar, but we prefer the euro. We're still standing back from the rest of the markets. Let's start with the dollar euro. And here we have the fairly spectacular situation of a break up through both the resistance from the bottom of this channel and through the bottom of the triangle. Let's look in more detail. And it's also breaking up through this diagonal. So it's three breakouts there. Here we have the diagonal shown again in the weekly chart, and the top of these two prior highs we've overcome. This is very bullish, I think, for the euro and bearish for the dollar. The more detailed shorter term chart suggests the catalyst for this is a nested head and shoulders patterns driving the market up. The target is about 118. If it's broken up through 112, the prior high, we think that will be good support on any pullback. So we are buyers of the euro. I said that the sterling was looking good too. Not quite as good, I don't think. Here's the long-term chart, the bounce off the 105 level, the push up through the resistance at 122, 121, very good. Still in a trading range, really, here. Arguably, we would be buyers of sterling on a break of 134. Nearer term, we could, in the very short term, be buyers on a break of 132. Either way, the market looks very strong. See, it's bouncing off these prior highs here and here. So it's a well-constructed bull trend, but the timing of breaking 132.07 would be our buy signal for buying sterling, selling the dollar. Quickly look at the S&P 500. The big picture is that the market has not broken down through the 4,800 support, which is the critical level in this big bull market since 2008. Look in more detail. It has pulled back what seems a violent amount, but as I say, 4,800 is the first real test of this market. Obviously, these prior highs have been broken as well, but the bounce has been such that the market now is in a bit of a no man's land, it seems to me. Obviously, above the market is 155.59 is good resistance, and good support at 4,800. We think the big picture is still bullish, medium term unknown, short term unknown. Short term concentrate on the 55.59 level. Euro Stoxx 50 has the same sort of pattern to it, except that the failure is a little more telling than Euro Stoxx 50, insofar as 56.24 was the very big prior high that the market should and needed to overcome to convince on the upside. So we're now established in a range between the big support at 43.92, the big resistance at 56.24. It looks a violent range, but the fact of the matter is that this is the major support down here. FTSE, a similar pattern. It all depends on the close at the end of April, and that it should be, if it can close above this neckline at the end of April, here's the long-standing continuation head and shoulders. If you can climb above that, then the whole pattern remains intact and the bulls are still in charge. If, on the other hand, the market closes beneath 8,000 or so, then it looks very poor. Quite a clear setup for FTSE. Short term, very unclear. The Nikkei is rather like the Dow Jones Euro Stoxx insofar as it's failed at a major prior high, in this case back in 1980 of 39,600, and that adds a bit more bearishness to the whole situation. It should have been able to get above there if it wanted to. It has, for the moment, bounced for the second time off 37.20, first time, second time. Obviously, a breakdown through this would be very serious, but that's the test. For the moment, we're stuck between this prior high and that support. Bonds don't have much to tell us. They're in a trading range. Going sideways, there's a very small short-term possibility here, but this is a trading range. Wait till it breaks this trading range. The gilt is in a similar thing, possibly a bull triangle. It's in a trading range. It needs to get above 47.75 to convince on the bull tack or higher rates, or before beneath 438. Oil is weak. It's coming down here, still within a big trade, but it's broken out of this medium-term trading range, and this looks weak to me. There should be massive resistance up at 62, and you can even read this as a head and shoulders top, which calls it down a long way, a lot further. So there should be massive resistance at 63.73. That's the May contract, and at this neckline. Watch how the market behaves up here, and it could be a good selling opportunity. Gold is, well, we've said it, long said it, it's overbought. But there's no sign of this rally petering out, but it is not sustained anymore by either this triangle or the continuation head and shoulders. They have made their targets, and the market is now on its own, carrying on under its own momentum, and for the moment, the trend is intact. Watch these levels beneath the market. Were these to break, the trend would be greatly threatened. Thanks very much.